So in the last video, we created a company that invoices $100,000 weekly. It must satisfy $40,000 of weekly payroll. It has to budget $25,000 a week for vendors. Those will accumulate and it'll pay them in a lump sum monthly. And it has to budget for $22,000 a week for G&A. It will make a G&A payment every 2 weeks. So let's assume it's going to make every 2 weeks or twice a month a $44,000 payment for G&A. So this chart is a 6-month forecast of the company's cash flow demands. Columns 1 through 5 demonstrate the amount of equity needed to be contributed by ownership to keep the company cash positive. Columns 6 through 8 demonstrate the positive cash relief provided by factoring. Let me explain weeks 1 through 4 because they repeat themselves throughout all 6 months. Week 1, the company must make payroll $40,000. And it also produces a $100,000 invoice that will be paid in 30 days. Week 2, the company must make payroll again, $40,000, and now must pay 2 weeks of G&A, or $44,000. Its obligation at that moment is $84,000 for this week. And it produces another invoice for $100,000, which is to be paid in 30 days. Please note column 5. The company is now out $124,000. Week 3. Now the company must make payroll again, and it produces another invoice. Week 4. This is when it all comes together. Week 4, the payroll is $40,000, the G&A is another $44,000, and now material and vendor costs have to be paid, and they're going to equal $108,000. Why $108,000 and not $100,000? Because there are more than 4 weeks in a given month. At this point, the company has a cash outlay of $356,000 without any income. That income starts in the 5th week. As payments come in and expenses arise going forward, the cash requirements are tabulated in column 5. As you can see, go all the way down the column. It takes a lot of money to make a profit. Now let's talk about columns 6, 7, and 8. U.S. invoice funding to the rescue. And I want to go back to weeks 1 through 4. For every $100,000 invoiced, USIF is going to advance $85,000 to the company. Now compare column 7 with column 5. In the 5th week, after receiving its first customer payment, this company still requires $300,000 of investment, cash out-of-pocket investment, equity. However, USIF has done just that and supplied another $40,000. At the end of 24 weeks, instead of being out $138,000, the owners are up $162,000, thanks to USIF advances. That happens to be a $300,000 difference. Positive cash flow management without the need for owners' contributions is a vital requirement. Factoring can eliminate that concern. Check out our next set of videos. We're going to discuss payment terms, the cost of money, and smart financing. So remember, if you're doing well, lots of business, lots of invoices, but you're running short of cash, give us a call. We can help. I'm Mike Johnston with U.S. Invoice Funding, and I look forward to talking to you about your financial goals.